Welcome to Markets Now. I'm Michelle Rook with DuWayne Bosse with Bolt Marketing, and we see kind of some nearly mixed trade right now in corn and soybean futures, wheat to the plus side, as well as the livestock futures. And DuWayne, we don't often start off with wheat, but we're going to because it's the price leader today. And let's talk about, is this just short covering or is there something fundamentally pop in the market?
No, I think there's a little bit more to this. When you watch a Kansas City wheat trade yesterday, we popped really well off the lows, almost like somebody knew something. Then I did catch some rumors this morning that China's possibly back in buying some more U.S. wheat. And when you think about it, Michelle, just a week ago, you and I were talking about the wheat market, and China was in there buying some of our wheat then. And we're cheaper now than we were last week. So it does make sense that China's probably back in buying our wheat, and that's part of the short covering rally here.
Yeah, when we get these pops, especially in wheat, I'm always looking for, something that is fundamentally pushing the market. And I guess that makes about as much sense as anything. How far can we extend a rally, though, do you think, in wheat?
Yeah, I think you can probably do some Fibonacci retracement levels, things like that. I'm not going to say that the absolute low is in and we have to make this big bullish turn up, but just making the harvest low finally and grinding higher sounds great to me. Now, there is some stories out there earlier in the week, and I know you covered it as well, about Russia maybe banning some wheat exports. I'm not really buying into that too much either. They got a big crop. Maybe they're done undercutting us. I think what that story does say that they let out is that it's gotten to a price level they don't even want to sell it anymore. So if that's the case, maybe everybody who's short the wheat market will finally start to exit. And just that rally itself, Michelle, can actually get us a decent rally in wheat.
Yeah, we've been waiting for Russia to cry uncle here, and maybe we finally have gotten to that point. But you also have to admonish that we were just at contract lows, and I think almost all three exchanges, or at least new lows for the move. So we're pretty oversold too, weren't we?
Oh, yeah, we got to a 3-year low in Chicago wheat, a 2.5-year low in Kansas City and Minneapolis. So, yeah, the Ukraine-Russia bull story of wheat is officially done and over, which is ironic because, of course, they're still fighting over there. But, fundamentals, wheat found a way to get out of the country, and that's what we've got here. So, yeah, back to the lows. And I do really feel like we are close to lows, but I think I've said that like for 3 times on here in the past 3 weeks for you in wheat. So take that with a grain of salt, too.
All right, you're not the only one that has said that and been wrong. I've said that too. Okay, corn market. Even though wheat's up, corn not following. In fact, we've made some more new contract lows there today. Are we just about ready to see pressure taken off of that market just because we're going to finally be into first notice date tomorrow and maybe some of this liquidation will get over with?
Yeah, I really think so, Michelle. Last week when we were talking, you and I were both talking about the amount of farmer selling that's going on this Dees contract, the HTAs from the summer months, a lot of that should have been done last week with option expiration, but I know some of them get carried over into this week with a few elevators. So I think you've had a lot of that position squaring going on, a lot of people getting out of long positions. And that, of course, is a sell order then, and it puts pressure on the Dees market. But yeah, with first notice day, the end of the month right around the corner here, I do think we're at a low. A little bit before we went on air here, actually, corn was up a little bit, and I felt so excited about up 2.5 cents in Dees corn, and we lost that pretty quickly. But I think we're going to run out of sellers. I'm not saying I'm big time bullish and the market has to run, but I think March contract can at least gain 10 to 13 cents and get to 4.85 again on the dead cat bounce.
Yeah, I was surprised to see or disappointed to see the December take out that 450 low, though. That was kind of a pretty long-term support area, wasn't it?
Well, it sure was, and it's depressing because we had so many clients that were short that market going into the fall, and we're done now.
And the soybean market is kind of drifting a little bit on both sides of steady right now as we speak. We were up early. Did we just hit chart resistance, or is this market kind of comfortable until we get more weather news out of Brazil?
Oh, I like the way you put that. I probably both. I mean, we did run into a little bit of chart resistance on 1350 for January beans, but I think the market is just comfortable. When you look at the extended forecast for Brazil, that's what we're watching right now, right? A little bit drier than previous. Not completely dry, though. There's scattered showers falling. Argentina showers this weekend. They look pretty good there. So really, we're going to have to watch that forecast. And the scattered showers they've gotten here lately, Michelle, really caused a sell-off here recently in soybeans. But that's what they were, scattered. They weren't really great rain-soaking events where they ended the drought. So I really look and wonder for maybe a mid-December rally here in the soybean market, and maybe the corn market as well if drought kicks up again in Brazil.
Yeah. And product values are a little bit lower this morning, especially meal. So that's probably a little bit of a drag on soybeans. The other thing is that there was a lot of talk yesterday of some China business off the PNW on the export front. We didn't get confirmation of that today, did we?
No, we didn't, but I do think that's coming. Anytime you see, we already talked about Kansas City wheat with their trade action yesterday, all of a sudden this big pop out of nowhere and nobody knows the news. And yesterday soybeans did the same thing, right? I've heard you mention many times before too, that, you wait for a China rumor there, and that rumor is out there. It would just make sense too. I think with Brazil's production being lowered by a lot of the big agencies out there, I think China is going to buy our soybeans on dips. So I think where we found the low here recently in beans is very good support. How high we can go, it just depends on the weather.
Yeah. And what happens in Brazil? What about cattle? A nice update yesterday, limit up move in the Jan feeders. So we're under expanded limits here today, and we are seeing some follow through. So are the funds done liquidating, DuWayne?
I don't know if the funds are done liquidating. On the live cattle side, they still hold, as of the last commitment traders report, around 38,000 longs. But remember, that was as of last Tuesday, and they sold off, or like you said, puked a lot before we got to yesterday's trade action.
Yeah.
Technically, the chart looks very good. It looks like a nice key reversal the way we came back. And now, like you said, seeing some more buying interest today. The chart looks great. I don't know if I'm going to say the low's in forever now and you can buy this market, because I'm just a little bit worried about this cattle market. I think what we did here with our higher prices is we brought in a lot of imported calves out of Canada and Mexico into our feedlots. And that's why the cattle on feed reports have been so bearish lately.
Yeah. So you took my question, which was, are the lows in? So now how much recovery do you think we can expect? That's my next question.
Kind of the same deal. I think you can use some Fibonacci retracement levels. That 36% would make sense to me. Draw some downward trend lines off of the recent highs, and you'd find a downward trend line. I would look for that. Look for the 9-day moving average, 20-day moving average. We can get back to there. But once you get to there, I probably will bug a few guys about maybe getting some hedges in place. Now, I'm still friendly the cattle market long term. And I know there's a lot of people that won't hedge because our supplies are supposed to be tight in 2024. But like I just mentioned previous, I'm afraid the economics have just suggested just bring those calves down from Canada and put them in our feedlots. And I think therefore the cattle on feed report stays somewhat bearish in 2024.
Yeah. Decided to trade in the hogs right now. We're trading a little higher, I think, except for that nearby contract. That market has quite a few headwinds here, including lower cash and cutout values. But we've seen a lot of this as technical buying interest as of recent. But where do we go from here, I guess? How much do you anticipate we can see in terms of upside after we get through some of these negative seasonals?
Yeah, I don't think a whole lot of upside to it. I think what we had recently is we sold off pretty hard when we found out China basically announced that they wanted to reduce their hog herd side, their sow herd. And, them by saying that basically suggests, they're not tight with supplies right now. That's from China. So maybe we should take that with a grain of salt too. Maybe they just wanted it lower because now it sounds like they're buying some of these pork supplies for the reserve. So maybe that's all they wanted to do. So I think we can bounce back. I think the low we made is a good low, but we have a lot of production here and we're not very current. Our weights are a little high. And if they keep the chain speeds down in the packing plants, well, it's going to be hard for us to rally here. We might get backed up a little bit. So I'd say sideways at best for the hog market.
Yeah, but at least, do you think the new contract lows we put in, I think even yesterday before we bounced, are those in the rear view mirror now or not?
Yeah, I think I can go on a limb and say that low should be good. We might test it again, though, is what I'm going to say. So nice disclaimer like all of us brokers tend to do.
Okay, thanks for joining us. DuWayne Bosse with Bolt Marketing. That's Markets Now.